Cash flow before depreciation and tax. No, it is cash flow after tax. 50,000 divided by 60,000, 1 year 0.454. The answer is 1.454. Here is your answer. In the present problem, earning after depreciation and taxes are given. See, this is very important. A warm welcome to one and all. This is your Adasa here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. Now we are discussing your Unit 4, that is Financial Management. Under that, we are discussing investment decision. Under investment decision, the main topic will be called as your capital budgeting. So capital budgeting usually goes with your investment on particular asset. It can be a machinery, it can be any project, it can be any capital investment. So in the capital investment, whether it is worth or not, you're supposed to find out. So this will be your problem. We'll go with a simple problem first, but I'll tell you what you are supposed to find out. You're supposed to find out NPV, net present value. And the second one, it will be your PI, profitability index. And the third one will be called as your accounting rate of return or average rate of return. And the last one, it is payback period. These are the 4 things you are supposed to find out in your examination. If it is a 15-mark problem, they will ask you all 4. If it is only 5 or 10-mark problem, it will be a small topic. Now, in this, a company is considering to purchase a machine. 2 machines are available, machine X and machine Y. We'll go with machine X, then we'll go with machine Y. Each machine costing rupees 1 lakh, earning after tax expected as follows. These are the things earning after tax. It is not that CBDT. Cash flow before depreciation and tax. No, it is cash flow after tax. So the first 2-3 steps will be eliminated. Now, so what is your income? 30,000, 40, 50, 30, 20. Similarly, machine Y goes with 10, 30, 40, 60, 40. These are the income you have. So directly we'll go with what? They have asked only to find out payback period and NPV. Only 2 things we are supposed to find out in this. Year 1, 2, 3, 4, 5. These are the PV factor they have given in the question. Now, in the present problem, earning after depreciation and taxes are given. See, this is very important. In the usual format, what we do, we'll go with the cash flow, then we minus depreciation, we will get some answer, again we'll minus tax. Yes, that we are not doing. Why? Because after doing all the calculation, they have given final value. So, taxes are given. While calculating payback period and NPV, we have to add depreciation amount to the earning to get net cash inflow. We can also assume that the given cash inflow are net cash inflow. Cash inflow after tax before depreciation. Cash inflow after tax before depreciation. So what we'll do? We'll go with 30,000. I'll go with the previous one. 30,000, 40, 50, 30, 20. Same thing, copy. 30,000, 40, 50, 30, 20. What is the depreciation? The total value of the asset is how much? The total value is 1 lakh. What is the life of the asset? 1, 2, 3, 4, 5 years. Now, this will be your 1 lakh. I'll do the calculation for depreciation. Divide by 5. The answer will be how much? 20,000. This will be your depreciation value. After calculating depreciation value, just add 20,000 for all. Your answer is 50, 60, 70, 50, 40. We are not calculating NPV. NPV will come later. I'll go with what? Your payback period. While doing payback period, always we go with what? Cumulative. Cumulative means what? 50 as it is. 50 plus 60, it will be 1,10,000 plus 70, 1,80,000 plus 50, 2,30,000 plus 40, it is 2,70,000. These are your cumulative value. Similarly, do it for Y also. All the inflow given in the question itself. I'll show you. In the question they have given, see, 10,000, 30, 40, 60, 40. Same thing, you copy that. After that, add all the depreciation. It is a straight line method, 20,000 each for all. So it will be how much? 10 plus 20, 30, 50, 60, 80, 60,000. Once you done with that, come to 30,000 cumulative. Cumulative means what? You have to keep on adding the next year. 30,000 will be as it is. 30 plus 50, it is 80. 80 plus 60, 140 plus 80, 220 plus 60, it will be 2,80,000. Once you done with your 2,80,000, what is the next step? Amount still no recovered or not recovered. In this, how do you calculate? Now your investment is how much? 1 lakh. What is a payback period? Payback period means, always remember, when do you get back your money? Again, I'll repeat. What is a payback period? When do you get back your money? That is called payback period. Now, in this, what is a payback period? 30,000, 80, 140, 220 as well as 2,80,000. In this, 30,000. Can you get your 1 lakh in the first year? No. Can you get your 1 lakh in the second year? No. Can you get your 1 lakh in the third year? Yes. In between second and third year, you will get back your 1 lakh. Now, amount still not recovered. In the second year, first year will you get 1 lakh? No. Second year? No. Second year you got 80,000. How much we need? 1 lakh. 1 lakh minus 80,000 is how much? 20,000. Amount still not recovered. 20,000. Divide by. Next year carry forward. Difference between 80 and 140 is how much? 60. Divide by 60,000. Hope you are clear how to calculate this. Now, you have to see when do you get this 1 lakh. You are getting this 1 lakh in between second and third year. In the second year, still we need 20,000 more to make it 1 lakh. In the third year, it is almost 80 and 140. The difference is 60,000. I'll show you the calculation. Machine X, the first year 50 and the next 60. The year it will be 0.454. I'll show you the first one, X. Now see, 50,000. Yes. Now, how much to make 1 lakh? Another 50,000 is needed. What is the difference between these two? 50 and 1 lakh 10. It will be 60,000. 50,000 divided by 60,000. See, 50,000 divided by 60,000. 1 year 0.454. The answer is 1.454. Here is your answer. Machine Y already we discussed. See, 20,000 divided by 60. 20,000. 1 lakh minus 20. 80 is 20. 60 it is 0.33. 2 years. 3 years. Hope you are clear. You are clear with payback period. Payback period is the most important one. Usually they ask for 10 marks one. Then payback period of machine X is less than machine Y. Machine X is accepted. See, machine X is only how much? 1.45. Machine Y is how much? 2.33. Whatever 1 lakh you have invested, to get back that 1 lakh in the machine X, you should wait 1 year, 4 months. Machine Y, you should wait 2 years, 3 months. Now we'll come to your computation of NPV, net present value. How do you calculate net present value? You know all the PV factor? Yes. Where do you get all your PV factor? I'll show you. Your PV factor 0.90, 0.82, 0.75, 0.68, 0.621. Take all your PV factor and machine X and machine Y. What is the machine X answer? I'll show you. These are the machine X answer. 50, 60, 70, 50,000, 40,000. Machine Y answer is all these considered as machine Y answer. See, machine X answer, multiply 50,000 into your PV factor, 60,000 into PV factor, everything multiply. Your answer is 24,840 for the 5th year. Add everything. 2,06,570. What is your investment? Minus 1 lakh. This will be your present value. Your final answer minus investment is your NPV. Similarly, the total is 2,05,000 minus 1 lakh. Your answer is how much? 1,05,530 is your NPV, net present value. If the same question they have asked PI, profitability index. How to solve profitability index? Yes, easy one. Instead of subtract, you have to do what? Divide. For example, 206,570 divided by 1 lakh. In this, 205,530 divided by 1 lakh. So you may get how much? 2.06. You may get 2.05. This will be your profitability index. The concept is very simple. If you invest 1 rupee in return, you will get 2.06. So you are in the profitability range. Clear? If you spend 1 rupee, you will get 2.05 paise. This is what you are supposed to learn. Yes. So this is all about your capital budgeting. In the capital budgeting, I showed you what is payback period, what is profitability index, and what is NPV. In the notes, I have given almost 3 to 4 problems. There is an actual problem you can work out. The complete table is there. In the table, first we have deducted depreciation, then we added depreciation. The final answer we have done NPV, profitability index, your accounting rate of return, as well as your payback period. Please solve all those problems. That is more important for your examination. Thank you.